There is one part of the Canadian economy that seems to be holding up the entire stock market right now, and that is gold. Canadian gold stocks have dramatically outperformed just about everybody else for the past year, and they've seen their returns skyrocket in the last couple of months. Today, I want to talk about the gold sector. Why is it doing so amazing? What is so special about the Canadian gold sector? And I'm going to talk about my favorite Canadian gold mining stock, Agnico Eagle, talk about what's happened with them recently. They released some earnings, did some really good numbers, and they've also had some huge stock price gains. Is it still worth buying in? Is it not? What do I think? All of that in this video and more. Welcome to Gordon Large Investing. My name is Liam. On this channel, we love to talk about investing in Canada. If that interests you at all, please do subscribe to the channel, like the video. It makes a massive difference and it doesn't cost anything. Today, I'm going to be talking a lot about Agnico Eagle, and to show you just how fantastic the last year or so has been for them, I want to just show you the stock chart here. If you look at the run they've gone on since about February 2024, when they were ticking down at about $60 Canadian, they have shot all the way up to $164 as of recording. That is a fantastic gain. And of course, it's left a lot of investors with the question, is it still worth buying the stock? And why has this stock gone up so much when the markets have been blood red for the last couple of weeks? Well, I think it all comes down to instability. And that's what we're going to kind of start on today. Why has gold been going up so much, and what is so special about gold? Now, if you're really into the stock markets, you have seen this trend playing out. You have seen fear, uncertainty, doubt creep into every single corner of the financial markets. And in this case, we got to zoom out from just the stock market, because we've seen routes in the bond price, specifically the US Treasury bond. The money loaned to the US government has been going down. To see just how stressful this has been for the US Treasury bond, just look at how the yields have moved over the last year. They're up dramatically. And specifically ever since that April 2nd Liberation Day thing happened with all the tariffs and the big board, the bond yields moved dramatically because investors were worried. They were worried about the long-term growth prospects of the US economy. This has of course been reflected in the stock prices. We saw dramatic crashes in a lot of stocks, specifically the kind of stocks that are depending on high growth, high risk taking investment. Well, that investment isn't happening right now with all these tariff fears, and it doesn't seem like it will happen until there's some sort of concrete end. This means that investors that are too afraid to be invested in some of these high risk stocks that now no longer have the stability of bonds are looking for anywhere to put their money. And the thing is, they can't just leave it in cash, because the US dollar itself has been at risk over the last little while, with a lot of investors pulling their funds out of US dollars and putting them into safe haven assets. Now, when everybody's running for the exits, there's one obvious pick, and that has been gold. Gold has been the historic holder of wealth for longer than any of us have been around, for longer than any of our civilizations have been here. It is this historic asset that we seem to always run to when people are scared. Now, gold mining stocks are a really unique opportunity when we're dealing with times like these, where the price of gold is going up dramatically, because they kind of work like a call option on the price of gold. I'm going to show you Agnico Eagle's Q1 earnings, and then I'll be able to explain a little bit better what I mean by that. So let me just show you this, and I've got just sort of the key numbers right here. And this is from Yahoo Finance. They reported record revenue, 2.5 billion. They produced about 874,000 ounces. Cash costs, $903 per ounce, with all-in costs of $1,183 per ounce. So they're spending about $1,200 to produce an ounce of gold. But when you think about where we saw prices recently, we saw up to $3,500 an ounce, which would represent a massive profit on that ounce. If we say they hit that $1,200 an ounce and they managed to tick that top $3,500, that means that there's somewhere in the range of $2,300 of profit on that single ounce of gold, which is an exponential amount more than if you saw the gold price at $2,500 and all of a sudden you're down to $1,300 in profit. So while the gold price has added $1,000, the percentage gain in gold has not been anywhere near as much as the percentage gain going from $1,300 to $2,500. When you think about it like that, you start to realize why these gold stocks have been running so much. Their earnings are going up dramatically. They're able to return huge amounts of money to shareholders. They're able to pay down debts. They have this huge influx of cash. But still, valuations are a little bit confusing. If you look at the trailing 12-month PE I've got here from FinChat, it looks at like it's about 25.5, which is pretty high, even considering we've got recent revenue growths of about 28% over the last 3 years. But whenever you're dealing with a commodity stock, it pays to zoom out. And if you see that 16% revenue growth over 10 years, all of a sudden that 25 PE looks a little bit less appealing. When you look at EPS, however, you see things are almost the opposite story. Recent EPS gains have been great, 34%, but long-term EPS gains have been fantastic. 66% compound annual growth rate in EPS is out of this world great. There's a couple other things we should mention. For example, valuation for the next 12 months, we've got a price target from FinChat at $183 with a PE at 19.5. So expecting the price to go up another 20-ish, right? Just under $20 a share. And they're expecting the PE to drop by about 5. So they're saying that earnings will continue to grow as we've seen in Q1. The price will go up, but you'll see sort of a little bit more of an evening out. Maybe the gold trend will lose a little bit of its buzz. But the question for me now is, what is the long term here? And to understand that, I really want to think about some of the macro trends we've seen. And to do that, I want to show you another article. Now, this is an article from Yahoo Finance. It talks about why gold is surging and why that's scaring people. But really, a couple of things I want to show are what the big institutional investors think about the gold trend. So we've got Goldman Sachs here that has raised its year-end forecast of gold for $3,700. So another $200 higher than the peak, and I think almost $500 higher than the current price. UBS is thinking that we're going to hit or exceed levels in 2020, maybe not get to the 2012 peak. Fair enough. And just for reference, levels in 2020, huge amounts of gold, huge amounts of investment in gold, right? If you think about peak fear, 2020 is probably the most recent memory we have of peak fear about the global economy. We thought the world was ending. It's about as scared as investors get. Inflows are going up dramatically. We see gold funds. So like they've done ETFs that are like literally you can buy a share of a stack, basically a pile of gold, right? In an ETF sort of format. We've seen funds dealing with like specific amounts of gold. It's a whole industry and it's growing dramatically. We've seen inflows going up a huge amount. And we see capital markets, RBC capital markets, saying that thanks to the questions about the Fed independence, gold continues to draw buyers because unlike most assets, it's not tethered to the US dollar. And I think that's really the biggest story here. Is gold a long-term asset? It doesn't produce anything. It is a commodity and it is scarce. But is that scarcity gonna be enough for long-term outperformance? And in all honesty, I think it depends almost entirely on your beliefs on how instability will progress from here. Do you think we're going to see things get more unstable? Do you think we're going to see an increase in instability, maybe more geopolitical tension, maybe more conflict in the world? In that scenario, I could see gold actually continuing to climb. On the other hand, if you think things are going to be fixed, if you think we're going to see deals being made, as has kind of been in the news, right? People talking about maybe deals are getting made. If you think we're going to see an end to the chaos in the US trade policy, economic policy, if you think we're going to see like concrete trade deals formed, you think we're going to see the global economy stutter but not come to a halt, well, maybe gold isn't going to be quite as valuable an asset. And if you don't have quite as much demand, then the limited supply is not going to keep the price where it is. And finally, the real question of today's video, what should we think about this stock? What should we do with a company like this that has run so much and yet is growing incredibly fast, is incredibly profitable, and seems to be incredibly stable? Well, I think this is a fantastic buy and hold opportunity. I think that Agnico Eagle is a great stock to buy, but I do not think you should be buying big lump sums of this stock right now. If this were February of 2024, none of us would have been looking at each other and saying, you know what's going to really outperform over the next years? Gold mines. We would all have been rushing to buy into the huge AI trend where you saw companies like Nvidia going up hundreds of % a month. We were all jumping onto the next name in semiconductors, the next name in artificial intelligence, the next name in technology, because that was the revolutionary trend going forwards. And we saw those stocks get bid up dramatically higher than they needed to be. This is probably a similar story right now. It is a fantastic company with a great business model that will perform well long term. But that doesn't mean you need to be buying all of the shares right now. You do not need to build a giant position at these current prices. I think it will really pay for this company that you just buy over time, you dollar cost average, you just show a little bit of patience. I think you'll be really rewarded because again, these guys are growing fantastic. Look at the numbers we talked about earlier, 28% revenue growth, 34% EPS growth. If you see that continuing over the next 3 years, then today's prices could just be a momentary peak as we go on to longer term success. We could see these guys leverage the huge amount of inflows into growing the business, buying more assets. We could see the increased investment in Canadian resource extraction benefit these guys. Maybe infrastructure is built. Maybe the government helps them out. Maybe permitting becomes easier. You never know. This industry seems like it is absolutely golden right now, but that almost always wears off. And so be patient. If you're going to buy this one, buy over time. That's my plan anyways. Let me know what you think in the comments down below. Do you think this is a great opportunity right now? Do you think it's way overvalued? Do you think that I have missed the boat and actually gold is going to the moon? Let me know in the comments down below. I would love to hear from you down there. And with all that being said, I really do hope I see you in the next video.